Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Thursday, everybody. We are in the aftermath, let me bring this up, of a few things that are on the radar. First of all, we do have a number of earnings, whether that be before the bell, Abbott, Johnson & Johnson putting the XLV in play, Travelers, CSX. So we have quite a bit in terms of data before the open. And then we've also got on the economic calendar, initial claims. And in terms of what we're dealing with, well, let me bring up the calendar here. In terms of what we're dealing with in the aftermath of initial claims, I'm never really all that concerned about the direction of the surprise, right? Whether that was a surprise by 19,000 fewer, right? So that's a good surprise, fewer initial claims. However, the real judge of all of this is price and volume, right? Price and volume. So if I jump on over to, say, the S&P, and I take a look at the reaction at 8:30, or I jump on over to the NASDAQ and take a look at the reaction at 8:30, you'll see that we were already coming off of some resistance just after 8 a.m. Eastern. And at 8:30, we just started to accelerate to the downside. Now, did we go anywhere new? That's always a really important question. Do we exceed any of the pre-market lows? Not in any meaningful way. You can see there about 3 times now we've tested the 15,820 area. So while it is down, is it somewhere new? No. Is it a bearish reaction? Yes. This reminds us that good news, meaning an initial claims number coming in lower than expected, that's good news, is still bearish, is still bad news to equities, right? So we're still in that good news is bad news in the market. The S&P, well, the S&P peaked around the same time, maybe a few minutes earlier, and it's far weaker. So when we start off the trading day, just a couple of tips on how we build a watch list during the trading day. I'm going to remember that components within the S&P are more bearish than components within the NQ. That starts to align our watch list. I'm not using a scanner, right? What I'm using is high concentration weighting. What I'm using is understanding that weakness in the S&P, perhaps even weakness in the Dow, means something entirely different than weakness in the NASDAQ in terms of those stocks that could be buys or could be shorts. And by the way, I do want to remind everybody, this is coming up. I should have a link for you all by the end of the week or early next week. We have our Sector Secrets trial coming up. So gang, this trial is happening in August, and this is going to be the only trial, I believe it's the only trial for this year. So if you've been wanting to come kick the tires on what I do in the Sector Secrets Mastery, whether that be day trading, whether that be short-term swing trading, or even my longer-term portfolio, my position portfolio, come check it out. A whole month with me in the room, and that'll be kicking off in August. All right, so I wanted to give everyone a heads up, kind of summer school's in session. I'm super looking forward to it. And I want to make sure I let you all know and remind everybody, because once it's done, that'll be the window for this year, gang. We're not going to be having another one in September. At some point, maybe next year, right? If you want to wait that long, I guess it's up to you. All right. So I don't want anyone saying, Rob, you didn't let me know. Now you know. All right. We will have all right. I'm getting the official word from the Trish boss. We will have the link next week. Super stoked. All right, gang. Next up is taking a look at what's going on in bonds. If you have any questions, type them on in. We'll dive into those. Yields are heading lower, which they typically would if, again, we're looking at the Federal Reserve maybe thinking about being more hawkish. We'll take a look after the bell what's happening with the Fed fund futures. Are we really seeing perhaps higher expectation for rate hikes in September or November or December? Probably not, but yields are minorly down. Let's also take the yields within context. Take a look at the 1-hour chart here in the center. The general trend is surfing that 200 propulsion. Take a look at the daily time frame. It's very choppy. Yesterday we had a really strong up day. Today we're having a down day, but by no means punching down to significantly lower lows, right? So keep these things in mind. What looks so dramatic on a 5 really may not be directionally that pertinent when we step out to a longer time frame and a longer time horizon. All right, so let's get to it. First up is good morning. Hey there, Christian. All right, so Christian asks, how do we determine short the rip versus oversold buying opportunities? Okay, so great question. All right, there we go. So, all right, Lorna Bot's mentioning that we are having some site issues, but it's already being worked on and should be fixed shortly. All right, so quick PSA there. Yes, we are aware and we're working on it. All right, so Christian asks, overbought versus oversold. So the first part of your question, Christian, is understanding the underlying market trend. One of the things that we do, and you'll see it on my charts, on every one of them, one of the things that we do is we use a really simple color-coded tool called the multi-trend. And that tells us if the market is in an uptrend, downtrend, or chop. And it also tells us if the momentum is bullish, bearish, or neutral. So the first thing I do is I look at that multi-trend, because if it's choppy, now we're talking overbought, oversold, slow stochastic. And if it's in a trend, now we talk about buy the dip. Now we talk about surfing the wave, etc. So we have more directional bias, obviously, in a trend. So the question was specifically about XLF. XLF is now in a trend and is straight up by the dip. So folks who are already subscribers to the top tier Outlook, that is the newsletter that I do. We renamed it as to avoid any confusion. So that is the newsletter that I put out. My Sector Secrets Mastery, folks, you get that with your membership. So by the way, when you all get the trial in August with me, you get the newsletter along with your Sector Secrets trial. So really stoked. And if you've been reading the newsletter, on the 30th and the retest on the 6th, flip the switch on financials from what was the bearish hemisphere to the bullish hemisphere. And we've been really pressing our advantage in XLF via JP Morgan in the mastery. And that's because now we have a relative outperforming stock and now a bullish sector. And the difference there is, Christian, look at the multi-trend. See those 2 rows of colors? The lower row is green. And when that's the case, we're looking for higher highs. We're looking to buy the dip. We're looking to find support levels that we can build positions on. Now, KRE is a little bit different. It's not as bullish. So this has been something we've been taking advantage of, but alongside of it, it's been really more the Russell. So right now, Christian, this goes back to watch list building, which is a huge part of what we do in the mastery. If I want to take advantage of strength in regional banks right now, I'm better off doing it via the IWM ETF or the Russell mini or micro futures, right? KRE is fine. We've had some great trades in KRE, but if I want longer term follow through and possibly a longer term time horizon, I'm going to be better off with the Russell. And the Russell allows me to simultaneously take advantage of KRE because it's the #1 weighted sector within that futures contract. So that's when it's a combination of the 200. It's a combination of that multi-trend. All right. Okay. Next up, Ravine asks, can you please look at Tesla on the, let's see, Tesla. Let's pull that up. All right. So looking at Tesla on the daily, kind of going back to even Christian's question, this is an uptrend. It's been an uptrend since the 5th, even the 2nd of June. So this is definitely by the dip. Right. And then also take a look at when it broke the 200 propulsion. Gang, the 200 propulsion in this layout sans the premium tools. Right. So no V-score, things like that. But the foundation, right, of my trading is the TOPS, right, tops layout, grab candles, wave, propulsion, Darvis. That propulsion is a big, big part of when I can view a market more bullishly. Take a peek at when we broke above on Tesla, the 30th. After that, and then the retest, this is so important, on the 31st, we're off to the races to the upside, gang. That is a high probability confirmation of movement higher. So that's where I want to be a buy the dipper on Tesla. And that's a pretty straightforward look. And as long as Tesla's moving higher and as long as XLY is moving higher, you've got very good confirmation of index sector stock, because the Nasdaq's already moving higher, the S&P is already moving higher in an uptrend, consumer discretionary is moving higher in an uptrend, and Tesla is as well. So that is firing on all cylinders. All right, Netflix. So gang, I don't want to play so close to earnings, right? So we had earnings yesterday. So I'm not going to play immediately in front of earnings. And I find that to be a very, very bad time to place sort of bets on a stock. What we want to do, and I love the question, David, what do we do post earnings? I love, love, love the question. A day or two before earnings, putting on some binary trade about something's going to continue or not continue. A lot of traders were asking me about LMT, what a poor decision it is to be bullish right in front of earnings when you don't really understand the context of the whisper numbers and the rally. Same thing here, right? Look at where we're opening. So a lot of traders might have said, oh, we're going to move higher before. It's a very low probability or risky. Let's talk about risky proposition. But David's asking about higher probability. Does the earnings opportunity in the aftermath, right, give us a potential buy? And yeah, I would say it looks pretty darn good. I would love to take advantage of a move lower into support, maybe the point of control, possibly even near the low from the Tuesday, July 18 candle. So David, love the timing of your question. Thank you. Thank you. All right. Next up, which is better, ITB or XHB? Well, it depends on what better means. They're both going to move very similarly because they're weighted with the same stocks, but they are not weighted in the same way. ITB versus XHB. ITB is a high concentration weighted ETF. XHB is not. So if you want the advantage, and it is an advantage, of a small number of stocks for the most part dictating where the sector ETF is going to go, ITB. And I would prefer ITB. However, the other thing to think about is also whether or not there is liquidity in that sector. If you're trying to play the options on this sector, make sure you've got at least 500 open interest on that strike that you're looking at. Okay. All right. Next up, what comments do I have on buying Meta? Okay. So Chuck, I don't sell premium. So I'm happy to talk about Meta, but I don't sell premium. I'm a big fan of directional debits. I'm a long call, long put type of trader. However, if I'm looking at a long call at a pullback, I would say that's the best timing for a trader looking to sell premium on a call, right? Or sorry, sell premium on a put. So if I'm looking at a long call as we pull back, that bearish momentum makes my call cheaper, and the bearish momentum allows you to collect more premium on the put, right? So the timing is the same. All right, so the question is, do I have a question on buying Meta and selling a 315 call? I don't do spreads, Chuck, so let me just talk about direction if that's cool. Do I like a pullback buy? I do. Would I want to do that in the daily price movement range? I would. I would absolutely only focus on long calls or on the weakness selling premium on puts, because that really is very much a bullish strategy. So bullish strategy only. And then as far as the run up possibly into earnings, so my time horizon's into, as you can see here, July 26th. I'm not looking, anything more than that window, and I'll buy the dip into either Wednesday before the close or Tuesday. So I'll just look to buy the dip into what's remaining of this window. But frankly, As we get closer and closer to this window, implied volatility starts to go higher. It starts to favor traders who do write premium, right? And for me, if earnings are on the 26th, I really want to take advantage of dips up until about the 12th, right? Up until about right here. So any of these dips, right? Look at all of these dips. Those are the dips that I buy with an anticipation of that run, that rally, that ride into earnings. So the timing is a big deal for me. I don't want to be really trading too actively with a longer time horizon inside 2 weeks because implied volatility starts to go, berserk. However, 4 weeks out, 6 weeks out, trending market with that countdown to earnings, that's a great window for these buy the dip opportunities. So thanks for the question, Chuck. All right, next up is, let's see here. And yeah, gang, just a quick reminder, we see all the comments. Yes, we are aware of the site being down. They are actively working on it, our tech team, and hopefully we have that up and running stat. Okay, so yes, we are aware. I do appreciate it. All right, so let's go ahead and take one more look at what's going on with the indices, and we will wrap up our charts and coffee session. And let's see. Oh, by the way, folks in the free training room, I'll be there today at, I think it's 1:30 Eastern. We're going to talk about earnings. We're going to talk about the rebalance. And so if you're part of the free training room conversation, I'll be there for a 30-minute session, 1:30 Eastern to 2 p.m. For rebalancing and earnings, right? Where are we in that window? And last update before I sign off, 10 to 20 minutes, they said. So a little bit more patience. They found the issue and they are on it. Okay, about another 10 to 20 minutes. Thank you as always, gang, for joining me for Charts and Coffee. I'll see you tomorrow, same time, same station. All right, be good to each other.